All right, what is going on, guys? I wanted to quickly run through this day. I was back testing, and I felt like this day was a perfect example of my model. If you have been watching my premium content that I put on YouTube in a playlist, I only trade three setups. I trade the 9:30 AMD model, I trade the 10 o'clock AMD model, and I trade continuations. And we were able to get a setup off all three of those on this day. So I really wanted to show you guys just the thought process and how I would deal with a day like this. So first of all, first things first, always I want to look on the higher time frames. Daily wise, not really telling me anything. 4 hour wise, we seem to inverse this gap to the upside, but then immediately went back down, telling me that we're probably going to want to seek this 4 hour fair value gap at some point. You look at the hourly, we have sold off inverse this first hourly, and now we're inside this hourly gap. We also have opened up this bearish hourly gap. So we're definitely in a downtrend right now, but there is a chance for uh, longs at open. So we respect this 30 minute. Let's go on the 15 now. We have this 15-minute intermediate, but no gaps at open. But one thing that is catching my mind is we are wicking this 15-minute right now. And this is a great condition. There's a 15-minute from London, a pre-market 15-minute. So what do I want to see? Obviously, let me just tell you guys about 9:30 AMD. You accumulate, and then right at 9:30 or right around 9:30, you want to see a manipulation leg where we go up or down and we take out some sort of liquidity. So, what is the obvious liquidity pool right here? Well, yes, we tapped the 15, but here's where a lot of people get messed up. Right before 9:30 or right before 10 a.m., we may tap a gap or sweep some liquidity, and people will be like, "Well, I guess it's happening early," and they'll enter early, and then they'll get stop rated right at 9:30 or right at 10 a.m. So you want to look and say, okay, when I'm taking this trade around 9:30 or around 10, is there any other liquidity nearby that could get seeked out and swept or respected or anything like that? And what is the nearby liquidity? Well, we have London low right here for both assets. So that for me, I would pump the brakes and I would not take this inverse, even though we have respected this 15 and come back above it. I will guarantee you that this is probably going to get stopped right at open because we are going to want to take this London low. So as you can see, it is 927 here. You would go for a 1-to-1, your stop would be up here. And, right when 930 opens up, what do? We sell off, right? Let's see it. Boom. So there we go straight to the 930. Right at 9:30, we go to the next liquidity pool. We also sweep some internal liquidity over here to the left. Now what? Would you say, okay, it's time to long? We swept London? No, because remember what my condition was. It was this 15-minute. And I don't want to take a long when we're below a 15-minute bullish gap. We're not respecting this. We're inversing this at this point. So what do I want to see? I want to see a reaction off of London that gets me an inverse coming back above the 15-minute. All right. So now what do we see? An immediate reaction, nice green candle. I'm going to assume there was a 30-second or something, but even if not, we could take a close above this bearish candle body. But would I get in here? No, because we're still not back above the 15. If we were to go on the 15, it would look something like, obviously this is now fast forwarding a little bit, but it would look something like this where we're stuck in the midpoint. And that to me is not enough confirmation that we're going to keep on going to the upside. So now what happens next candle? Boom, we get a bullish candle close above the 15. So now what have we done right at 9:30? Well, we accumulated right beforehand. Then at 9:30 we sold off to a nearby liquidity pool with London low. There was no S&T, but it's all good. And then we push back above that 15 minute. So we're now back to respecting this 15 minute, and we are sweeping liquidity right at 9:30. So this is a perfect 9:30 AMD. We also have good internal draws with these two highs that are relative equals. They're pretty close to each other. And then I always go for a 1-to-1. I put my stop below the candle. So you could be tighter with your stop and go 1-to-1 with the equal highs, or you could do below the candle. I wouldn't go below the low just because that's a huge stop. Like, what is that? Yeah, that's, already basically the entire range of AM. So 25, 25, also about 28 points away is the midpoint or the 50% of the range, which is usually a good draw. So that'll probably get hit. Boom. For one candle, we hit the equal highs. And now it's time to switch over to our continuation. So that's one trade. That's one of my three setups. Now let's go over the second one. What happens? Boom, we sell off, and what happens at I believe 9:45? We've inversed our 15 now. So at 9:45, as you can see, there's a 9:30 candle in the 15 minute. So this means that at 9:45 we close below the 15, flipping order flow bearish. Now, what do I want to do when I see that we are now disrespecting PD arrays to a certain direction? I want to take continuation trades to that side. And remember when I said it happened at 9:45 that we inverse this? Well, look what happens right at 9:50. We open up a 5-minute gap. Yes, we swept London, or sorry, Asia, but I'm not expecting us to come back above this 5 minute because we inversed that 15 to the downside. And if we do come back above the 5 minute, then whatever, I just won't short out of it. But, my idea is we inverse this 15 minute, so we're probably going to keep going down, and now we've made a 5 minute gap. Now, what do we do? We've also, oh shit, my screen froze. We also, what in the actual fuck? We made a 5 minute gap on ES, giving me an idea of true manipulation, aka both assets manipulating into a liquidity pool, and it's about to get better. What happens right here? Boom, so we tap and respect both. Also, we have an internal S&T, a beautiful thing. As you can see right here, this candle, its high got taken out on ES on the right, but on NQ, we are under or below it with the wick. Now, I would probably, we don't have the 30-second because this is back in March, so I would probably get in, assuming there's a gap, probably somewhere around here. But even if you wanted to play it off the 1 minute, which I think this would be a very late entry, as you can see, the close all the way down here. Let's say it was right here. You put your high above the SMT for 62 points. Obvious break even would be, this high right or this low right here. And then what do you know? Boom. TP gets hit. No drawdown at all on these trades. And the reason why there is no drawdown on these trades, if you go in my journal, almost all of my trades have no drawdown in them because price is aligned with time. All right. Price is aligned with time. And here, the reason why, it's because 9:45 we inverse that gap. We inverse that 15 minute, telling me that okay, now we are probably going to continue selling off. We get a perfect retrace with an internal S&T, tapping a 5 minute, no drawdown, we go down. Now, last setup. Now we sell off. And remember, what is the third trade that I take, or the setup that I take? It is the 10 o'clock AFD. So the same sort of situation as 9:30, but at 10, all right? So where is 10 o'clock? It's right here. So 10 o'clock opens up. Remember when I said there was this 4 hour below? So now I want to see if we didn't open up a 15-minute bearish or anything like that. So the next liquidity pool that we could manipulate into from the 10 a.m. candle is going to be this 4 hour gap. So let's see. We should sell off to it at some point and aggressively as well. And what do you know? Hold up. Oh my God. Forgot it took this long. Oh my goodness. Right, there we go. So we've tapped the 4 hour gap and we have this 1 minute inverse. Boom, we come up and we inverse it. Oh my God, this is a perfect trade. Let's go. 10 o'clock accumulated, didn't do anything. And then we finally manipulated to our most recent liquidity pool. We also swept this low to the left and we get an immediate 1 minute inverse. Stop loss there, 1-to-1. Why is this going to fail? Anybody know? You probably shouldn't because I haven't showed you why. But let me show you why this fails instantly. Boom. That is the thing. You know immediately if you're right or wrong with my setups because if you're right, it works immediately. And if you're wrong, you lose immediately. Why did this lose immediately? I'm about to show you, motherfuckers. Because if we go on over here, we have a liquidity pool, and not just any liquidity pool. It is a session low, the New York PM low from the day prior. And guess what we're probably going to want to do? Remember when I said make sure make sure you're manipulating and there's nothing else to go by? Like, if you're entering right before 9:30 or right before 10, make sure that there's no liquidity pools nearby. Well, this is an obvious session low on the 15-minute, 30-minute, and hourly, and we're obviously going to manipulate to it. So now watch this. What happens next? You get stopped out on this setup instantly. This blue line is that session low. What happens? Boom, we wick, respect it, and now we have another 1 minute gap here. And let's see if we get the inverse. Geez, I would probably want a quicker inverse than that. There's the inverse. Okay, so we get the inverse kind of far. I'll just do it at the level 1-to-1. So that would be 45 points. Boom. TP hit. And what do you know? Once again, no drawdown. There's the inverse. There's the play, no drawdown. So there's three setups. Those are the three I look for. And this was a perfect day to show you because they all happened on that day. And that just shows, make sure there's no liquidity pools nearby for us to manipulate to at those time zones. Continuations, make sure that the higher time frame like the 50 and 30 hourly are on your side and you'll be good to go. And make sure that your stop loss is not at a open liquidity pool.